Hello, everyone, and welcome to the program. This is Business Incorporated. I am Bruce Cinemafai. We're live to you from Channel's global headquarters in Lagos. We're starting all the way from Africa. Ivory Coast, renowned for its cocoa production, now aims to double its oil and gas output by the year 2020. In Uganda, Altex Africa Group launches a new financial exchange. Plus, the Bank of England in the last 1 hour left interest rates unchanged at 0.5%. Let's get started. Let's start from West Africa, where we are. Ivory Coast now says roughly double its oil and gas output by the year 2020 as the country pushes for foreign investment in offshore exploration. While Ivory Coast has developed natural gas deposits for domestic consumption, French-speaking West Africa's largest economy has ignored its energy sector for decades as the government concentrated on developing agricultural products. Authorities are now seeking to develop offshore reserves in the Gulf of Guinea. Companies currently producing, doing exploration in Ivory Coast or conducting production and exploration services include France Total, the U.S. firms ExxonMobil and Anadarko, as well as Africa-focused oil company Tullow. In Uganda, Altex Africa Group, that's an investment holding company incorporated in Mauritius, has launched a new financial exchange. The first is in a series of steps to establish the network of exchanges across the continent. Altex East Africa, which is Altex Africa Group company, opened to operate an alternative financial exchange in Uganda. That exchange will have the capacity to handle about 150,000 transactions per second, and it's one of the fastest in global production. Altex says this is a truly groundbreaking innovation that challenges the traditional context of efficiency in the securities markets. And of course, the biggest story around the markets today, as we speak, within the last hour, Marcari's Bank of England has left interest rates at 0.5%. 9 members voted 8-1 to keep rates unchanged at 0.5%. Most analysts, however, predicted a proactive move from the committee with an expectation that the BOE will relax rules to encourage more lending and deal with the Brexit situation. The central bank is now expected to release its quarterly inflation report on the 4th of August, detailing new forecasts for growth and inflation. Just before we came on the air, the pound sterling was trading around 1.339 on the US dollar. That's about 1.86% to the north. The UK 10-year bond yield also heading higher, 0.06 at 0.85. And the FTSE 100, that's the benchmark index for the London stock market, about 0.1% in the green. That's the biggest story. But let's cross over to Frankfurt Stock Exchange, where my colleague Annette Westback is standing by for DWTV Channels Television to bring us up to speed what has happened in the last hour. Annette, it's good to see you. Let's start from the BOE's decision within the last hour. Now, some folks say this decision will be on the ground till the 4th of August. Do you agree? What is the discussion right there at the German exchange?
Well, we are seeing that this decision was really a surprise to the market. You see the big billboard behind me, and there was a severe dip in the benchmark index DAX here around the time when the BOE announced that there is no decision to change interest rate and there's no decision to change the asset purchase program. But somehow the DAX kind of recovered. It's still trading up the threshold of 10,000 index points. You've said that earlier already. The pound has shown actually the biggest move on that non-decision of the Bank of England to react. It's trading up quite significantly against the US dollar and also against the euro. Of course, it was widely expected. More than 80% of polled economists by Bloomberg have expected that the Bank of England at least will cut the rate by 25 basis points. But of course, the evidence also is suggesting that the Bank of England will most likely act in August. If you read through the press release of the Bank of England, then it says that the majority of board members as soon as August. And the reason behind that is that is the first time they will have hard data to actually have an idea of how badly the Brexit vote has affected the UK economy.
Yes, Annette, everyone will be saving their bullets till the 4th of August. Yes, you have some economic data to deal with, quarterly inflation, economic forecast, and everyone will say, how do we move forward with the Brexit situation, with a new Prime Minister in place? So, it looks like the market will go steady, at least until a few weeks' time.
Well, it's a good question, actually, whether the market is steady until that point in time. It's kind of interesting. If you see what happens in the United States, we have the U.S. indices at record highs. At the same time, we have, of course, Europe a little bit still down on that increased insecurity surrounding the Brexit votes. There are people who are saying that the Fed, for example, will actually push its decision to move interest rates higher to an unforeseeable future because of all the heightened insecurity. And that is also why the markets are more or less rallying, because they all rely on more cheap money to come and perhaps cheap money to stay for a longer period of time than previously anticipated. Well, when it comes to the pound exchange rate, the majority of analysts are expecting the pound to lose value against major currencies as we are heading into the discussions of how Britain actually wants to leave the European Union. The new Prime Minister, of course, she made it pretty clear that Brexit means Brexit, so there's no turnaround here expected, that Britain eventually might actually stay in the European Union. So that is probably, this road is closed. But still, I think there's still a lot of insecurity or not very clear, there's no clear path towards what happens next and how the future of Britain might look like outside the European Union. You know, Mr. Hammond, the new finance minister, was just calling for British Bank to have access to the internal market, which of course is a nice idea, but I think there's no cherry picking for Britain now when it comes to access to the internal market.
Yes, so Annette, let's save all our bullets until August. Meantime, look at the German DAX for us today. Almost all the major exchanges in your region are in the green. The FTSE 100 is catching up with the DAX just across behind you there. So who is benefiting from the German market? The industrials, the financial services. Who is making the gains this trading day?
Actually, it's the financial stocks who are benefiting the most, I have to say. Deutsche Bank shares, for example, have actually a rally since 2 or 3 days. They have been hit the hardest after the Brexit vote with all the insecurity around. Today, Deutsche Bank stepped out and said, we feel very comfortable being in continental Europe with our headquarters and will make our plans accordingly. There's a lot of buzz here in Frankfurt surrounding or around who is actually moving perhaps more staff into Frankfurt from London, and there's a lot of speculation that Frankfurt will benefit tremendously from the UK leaving the European Union, because the financial services sector, of course, is very big here in Frankfurt. Well, another big story here on the market side is about cars. You know, Volkswagen had that big affair with the diesel engines, which didn't, with the cheating device inside the diesel engine. They are trying to settle that problem with the U.S. authorities, and now the U.S. regulator actually is rejecting a plan from Volkswagen to fix their diesel 3-liter car, which means that Volkswagen might have to pay even more money to U.S. regulator than previously anticipated. And we are talking here about serious money, about probably more than $20 billion US.
That's quite a lot. That's quite a pile of cash to head scratch right about Annette. Thank you very much. Isn't it great to have you on the program? Annette Westback, DWTV financial correspondent for Channels Television at the Frankfurt Stock Exchange. Let's take a break. We'll be back. We'll have a lot more to talk about Africa in terms of retail banking. We've got a guest here in the studio to talk to us on that.